the informed investor, thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
I suspect at the weekend there was a few sighs of relief from some in the real estate industry about the non-election of the Labor government. Charles Tarbey's the chairman of Century 21. Dodged a bullet on the negative gearing changes.
Well, it looks like, Steve, and rightly so, as we've said so many times. I don't know what it is, but they pick on these areas. Negative gearing is like any other business. You have an expense in terms of interest and maintenance of a property, and you have income from a tenant, and that's income and expense, and one matches the other. And I don't understand it, because it does invite investors in. It does invite people to start to look after their own futures. It does create more housing for tenants rather than government housing, private housing, which puts pressure on individuals to make sure the property is right. So it's a bit disappointing that that's always become a target, or was a target for Labor anyway.
You'd have to think that's it, dead and buried, won't come back again. I mean, you can't keep taking this thing to an election, losing and think you can go again.
No, I mean, this is the second time that they've put this together. The first time they actually got it in place, and it didn't work then. I mean, there are countries around the world where negative gearing doesn't exist, but that's been like that for a long time, and people have found other ways to invest. When you invite people to invest for many, many years, you invite them to create residential tenancies for people who can't afford property, and you invite them to create an environment where work is done around property, etc., maintenance rates, taxes, land tax, God knows what other taxes that come with it. You invite people to do that, and then you take it away from them. That's the part that I don't get.
You'd have to think that perhaps the return of the Morrison government might now mean that the real estate market may not stay down as long and as low as some were predicting. The other thing, of course, we've got to remind ourselves about, Charles, that during the campaign, the Prime Minister, Scott Morrison, announced that policy where the government would allow people to buy, first home buyers, only 110,000 of them, I think, buy a property with as low as a 5% deposit. Now, I'm not sure I'm a fan of that. What do you think?
Well, I think that there are some people who can afford it, and that's the issue. If you're not careful, you put people in a position where they can't afford it, and if interest rates climb just slightly, that puts them in a very vulnerable position. But Steve, there are a significant number of professional people out there, especially who have solid incomes but still can't save enough from a deposit perspective. But if they were paying off a home, it would actually be cheaper for them than renting a property. And I think there's a lot of those people out there that could gain a benefit from this. But we're trying to help the first home buyer as well, and I think the only way you can help the first home buyer is looking at the marketplace we're in right now, is to continue to create more stock, or create an environment where there's more stock so the prices don't jump so quickly. And if interest rates start to reduce, which again there's talk of that, there's a chance for people who want to capture their first home to jump into an apartment where the pricing in apartments has dropped significantly. And I think that's where we've got to help people, because it should be cheaper to rent right now. Cheaper to buy than it is to rent right now.
Talking to Charles Tarbey from Century 21, you mentioned interest rates. Some suggestion the banks are eyeing off an interest rate cut maybe as early as next month?
Yes, and of course they're not going to do anything during the election. We sort of should have worked that one out. But I think you mentioned to me last time the banks were talking about the fact that they may not pass that on.
Mm.
And that's an issue in itself. Again, it's difficult when the government or their regulators are trying to control the economy, and then the banks stop that from happening. But I do think that the banks will, given the fact that banks have had a pretty severe bashing over the last few months, I'd be surprised if they didn't pass on a significant amount of an interest rate reduction. And I do think one is on its way.
Stock market surged today after the coalition win. That will be good news for the property market. I note on the clearance numbers that everywhere bar Canberra, the auction rate is up on where it was this time last year. That's quite remarkable.
Yeah, it is. I mean, obviously the numbers were lower because it was a election weekend, but Melbourne 62.9%, and Melbourne hasn't broken 60% like solidly for a while. It did it 3 weeks ago at 60.8, but 62.9 and decent amount of options, 427. Sydney at 60.7, but again, Sydney's been in the 60s for a few weeks as well. And I keep trying to say to people that the big thing you've got to watch out for right now is that there's a lot of stock reducing. So when you look at the amount of stock that we had this time last year compared to now, it's down by 0.32%. So the stock levels are dropping, the buyer inquiry is increasing, the clearance rates are increasing, the interest rates look like they're reducing. The Morrison government's in, there's no election, there's no Royal Commission into banking, there's nothing now to stop people from looking solidly at a real estate investment.
So this could be a good time to buy. I mean, we've been trying, all along to pick the bottom of the market, and that's a very difficult thing to do. But perhaps we might be getting close to that point where, this might be the time to jump in.
We're getting very close. The banks need to relax their lending or the pressure they put on lending, and I think once that happens, and a lot of those apartments that have come on the market have started to flow through now, and we've seen the decline in price there. I think we're reaching a point where stability is where it's at. Perth market, they're talking that up now, and you and I have been talking about that Perth market for a while. Vacancy rates in Perth, amazingly, hit the lowest I've seen them in ages, 4.94% vacancy last week, as compared to over 14% this time last year.
Yeah, vacancy rates are interesting because, I have heard some anecdotal evidence that people are finding it hard to find tenants.
Yeah, in some areas they are, but in the prime areas they're still very strong. You look around the centres of Victoria, it's 1.01% vacancy rate. The one that's climbed is New South Wales. New South Wales has climbed up to 4.73%.
Yeah, well, that's a big difference. Charles, thank you, mate. Always fascinating, particularly straight after the election. I'll talk to you next week.
Thank you, Steve.
Charles Tarbey from Century 21.